What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AMC for AMC Entertainment, of course, the infamous movie theater. On the left-hand side, we have the daily. On the right-hand side, we have the 30-minute intraday time frame. The first thing I want to just illustrate is where we are in relationship to the overall up move that happened in here. That was when there was peak euphoria, the big rally higher. We're sort of, well, actually, I would say we're definitely underneath in the lower third of that move. And just to quickly check, we'll take out the fibs. And yeah, I mean, if you do something like that roughly, I mean, even if you wanted to call it, lower in here, we're well underneath that 31 level. So it's not looking so good for anyone who sort of was buying up at the highs. We've known that for a while now, but as we move further and further down towards this base, again, I think more people sort of start to realize, hey, reality's setting in. This isn't going to be a $1,000 stock someday, as some people claim for it to be. In terms of what's right in front of our face, there was potential, and I will fully admit this, for an inverted head and shoulders here. It just never panned out, right? So there's no reason to be bullish on that pattern anymore now that we've firmly broken down underneath the shoulder line closer to 2730s, and we're nowhere near the neckline. We're also starting to get, again, a bit of an H pattern here forming on the daily, equal lows after lower highs. Generally speaking, that doesn't bode well for this holding here. We would expect the daily downtrend to continue underneath that 2277. So what are some downside levels going to be? Well, scrunching the chart back up, you can really see that there's not a whole lot of structure until we get to the green candle low from that gap down. We'll throw that on just so we have it. But ultimately, the target would be closer to 1450. So again, there's just no reason to be overly optimistic about AMC right now. I don't know what side of the spectrum you fall on in terms of being an ape versus someone who's skeptical, but from a very non-biased perspective, there's just nothing bullish about this chart right now. To be quite frank with you, the only way we would get bullish from the daily perspective would be if we can break the daily resistance trend line, which we're nowhere near, right? That's currently, if this is going to turn around and do it tomorrow, that's like $35. So another, north of $10 move to the upside, I just don't see it as being likely, especially in the market conditions that we're facing right now. Let's take a closer look at the 30-minute intraday time frame, see how this bear move actually was unfolding. Very, very aggressive to the downside. Now, given that we've had those 3 very aggressive days to the downside, I'm not sure I would chase it short here. I might wait for a bit of a dead cat bounce and then look for another rollover point if you're so inclined to short the stock. Now, what would that area be? Well, there's 2 Fibonacci's we want to pay attention to. The first one is going to be the full move that we've experienced so far from that most recent pivot high down to the low, and the 38.2 is actually coinciding beautifully with this little uptick and exactly where we sold off of from this morning's open. That's 2540 roughly. We're going to throw that on with a horizontal level. Then we'll check one other Fibonacci just to see what the more aggressive short position would be, and that's underneath today's 38.2. So coming in like this, and what you'll notice is based on structure, we should actually follow the 61.8. Let me zoom in on that a little bit. We know that if we were to close candles above the 61.8, this level right here, the odds of the 100% retracement would have generally increased, but it simply didn't happen. We never closed any 30-minute bar. We actually rolled over, new low, and then closed weak on the day. So to me, it's really that structural area as the sort of level to watch out for, not the 38.2 from this more nuanced perspective. So I know it just looks like we have a ton of random lines on our chart now, but let me sum it up for you. As long as we remain underneath this 2421 doing something like this, that's ultimately the most bearish we can get. That's underneath the 68.1 on today, or excuse me, 61.8 on today's time frame. Again, bear flag here. Even if we were to look at it from a bigger perspective, that's still well underneath the 38.2 from the grand scheme of things, this entire move, which is just furthering the sort of idea that the chart is certainly not bullish. Again, the only way to sort of get bullish on AMC right now is if we were back above the resistance trend line, and I don't see it as a likely scenario. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.